How much is it? How much is it? We are all participating. We are all participating. How much is it? Much better. 840,000. Now listen to me. This is recap. We've already explained this for one. So this is intended for you, Malova. Now, when we are required to do what? To correct the net profit. Or rather, when we are required to calculate the corrected now what net profit. It will depend on the question. Sometimes it is calculating correct net profit before tax. Sometimes it is calculating correct net profit after taxation. Here's one. Now, what's the idea behind this? We are basically doing corrections here. How because so they have already prepared the normal income statement and arrived to this amount only to find it is what? Incorrect. What's the duty that you and I used to do? It's what? Is to correct the what? The correct, to calculate the correct net profit. Are we together? Right, now listen to me. We have 4 items that I want us to pay our attention to. Which are those items? Let me write them here. 1, we have what? Accrued what? Income. Is it guys? Okay. 2, we have what? Accrued expense. Are we together? Yes. Next, what is it that we have? Prepaid expense. We have prepaid expense. Isn't it? Yes. Okay. Lastly, what do we have? We have what? Deferred. Okay, guys? Deferred what? Income being what? Being income received in advance. Are we together? Yes. Now, when you are calculating the correct net profit, you need to look at the impact of these items on what? On the profits of the business. Do you understand me? Yes. We look at the impacts that these items will have on what? On the profits of the business, so that it will inform us whether we are adding whatever adjustment to the incorrect or whether we are minus. Guess what? Yes. Right. Now, let's look at accrued income. What is accrued income? What is accrued income? Nobody knows. Mabulan, what is accrued income? Of course, I've already given you the platform now. It's income and in the current financial year, but not yet received. Hello guys, it is outstanding income. It is income that should have been received, but not yet received. How did that? Now, our matching principle from our GAP principle, isn't it? Says our incomes and expenses and or incurred in the current financial year should be recorded when in the current financial year. Just one answer. Regardless of the fact whether it was received or not. Regardless of the fact whether it was paid or not. Are we together? In case of what of accrued what? Expenses. Are we good? But in our financial statements, we record it as if it has already been what? Received. So again, one accrual basis. Are we together? Remember, accrual basis and matching principles go hand in hand. Let's record all the expenses or all the income for the current financial year being what? In the 12 months. If says it's only for 13 months, the 13 months should not be disclosed, right? It should be taken out. See, should call it's either it is an asset or it is a liability. Yes, enough. Are we together? Now, this is income that should have been received but not yet received. Now, when you are preparing the normal income statement, what would you do? What would you do? You will add, right guys? Because whatever amount is we call a trade balance, we extra or we short. It's we short, right? So So what do? You add it right now to make in 12 months. Are we together? What did you do? You added, right? What were you adding? An income, right? And yes, so that means our total operating income, are they increasing or decreasing? They are increasing, right? Now ask yourself this question. If my total operating income increases, what therefore will happen to my profits? Will my profit increase or decrease? Increase. Same as same down to mine. Are we together? Yes. We are libertarians. May we proceed? I'll tell you this already. Mama, sure. Did you listen? Right. Let's look at accrued now. Accrued what? Expense. What is an accrued expense? What is an accrued expense? An outstanding expense, right? An expense that should have been paid but not yet paid. Right? Once at the normal income statement, what do? Year short or extra? Year short, right? Yes. Once at the normal income statement, which is of 15 plus. Right? Once you add, you are increasing the total value of your operating expenses, right? Yes. What happens to your profit if operating expenses increases? It decreases. Same as now to money. Are we together? Yes. Now let's look at prepaid expenses. It is an expense that has been paid for before its due course. And it is an expense that is paid for before its due time. Are we together? Yes. So we should have paid for 13 months, but it has calculated for 14 months. So definitely we made two payments which do not relate to the current financial year. The extra or the short? Yes. Preparing the normal income statement, what do? You add or do you deduct? Yes. Once you deduct, you are actually reducing the total operating expenses, aren't it? Yes. What happens to profit? Increases. Something plus. Unamsko? Obvious, that's from it. Deferred income. Income received in advance. Income that should not have been received, but already received. Guess what happens? You should have received income for 12 months, but says you received it for 15 months. The 3 months, does it relate to the current financial year? No. It relates to the next financial year, yes? Sim George, what? Yes. The extra or short? Yes. The extra, yes. What do? Separate. You are reducing your total operating income. What happens to profit? Decreases. Questions? Questions? So please, when we go into this activity, have this in mind. Are we together? Let's go straight to the activity.